But we do also have Sanjay Mathur joining us on the phone line this morning. So let's discuss some of these factors at play with him. And I think, Sanjay, this morning it's really got to be all about Trump's commentary coming in with regards to the Fed maintaining its pressure on them to reverse their stand, to start to cut those rates. The bigger concern here, of course, is with regards to global growth across the board, and particularly in light of those escalating trade tensions. How do you see things panning out? What room for maneuver do you feel the Fed will actually have?
Well, I think, what is very interesting about this is that if you were to look at centers of growth globally right now, it's really just the U.S. that is holding up. And this is the one economy that's pretty much operating, and the only economy that's operating at full employment at this point in time. And obviously, that is one of the bases as to why, in our view, the U.S. has been able to exert so much pressure on China. So it's not 100% clear whether the government can actually convince the Fed to cut interest rates or support the economy. There are two questions. One, does the U.S. economy really need a lot of support? And then we've also had some Fed speak, which are saying that there is absolutely no reason at this point in time to cut interest rates. The important thing over here is that if the U.S. economy is at full employment, their ability to absorb higher tariffs is probably a lot greater than, say, had this event happened 3 or 4 years ago when the labor market was not in good health.
Yeah, and you do have Donald Trump as well, just describing the trade war with China as a little squabble. Now, Sanjay, I just wanted to get in your thoughts as to what the underlying theme could be with respect to this. Yes, we did see a relief rally play out, but it seems like several under-the-radar indicators are pointing that this could see a serious dent to the economy of both the nations. Do you agree that if this, trade war were to escalate beyond just rhetoric, that would be the outcome?
Well, I think that this particular, the latest bout, goes way beyond the rhetoric. This was, we saw that there are higher tariffs. The sort of discussion seemed to have been stuck on at least 3 issues. One is China wants that all additional tariffs that have been imposed on its exports to the U.S., they be removed. Now, from the U.S. side, they want to keep this as a safeguard that China will honor its commitments. The second thing that China stressed is that for China's imports from the U.S., they should be in line with real demand. This will not be acceptable to the U.S. authorities. And thirdly, they want immense amount of structural reforms in China, whether it's intellectual property right protection, technology transfer, etc. So this could be a very long-drawn affair, even though that sort of new 1-month deadline is now in play. So I think that this could be a very prolonged sort of situation. The problem here is, however, that the impact is probably more immediate on China. And we've seen that. So we've got the sort of April data vis-a-vis fixed asset investment, vis-a-vis industrial production and retail sales. And the data is fairly weak, particularly when you consider in the light that China has been attempting to stimulate its economy from the monetary side from last year. The fiscal stimulus is relatively new, but we should have expected a stronger response from the real economy, and that's not happening.
Then for giving us that perspective, Sanjay, as to what's going on across the globe.